Mayuresh, Realty has been the best performers year to date. Do you think stocks have run ahead of the fundamentals, or would you say that this is a multi-year cycle and there is still phenomenal money to be made here?
Yeah, so I think if you go by the previous historical cycles that real estate has gone through, obviously it remains to be a 6-7 year old cycle, and we are in the middle of that range, and therefore there are still some legs to go. Obviously, the tailwinds which are aiding the kind of growth that you've probably seen, which are getting reflected in numbers. Pre-launches are getting very well accepted, specifically the premium and the ultra-premium launches. You've seen examples like DLF, an example in Colte Partil as well. And therefore, I think new launches getting very well absorbed by the market itself. The second element in terms of unsold inventory has come off significantly in the last few quarters. And with the rate cut cycle, again, that can get initiated, all these rate sensitives will be back in focus. So yeah, more legs to probably go. A lot of companies have deleveraged their balance sheets to a large extent. And therefore, the kind of earnings momentum that one can expect from these stocks can very well continue. Obviously, I think historical valuations and where they are trading at the juncture are fairly valued as we speak. But if earnings are expected to come strongly in the next few quarters, my own sense is that the momentum can very well continue, assuming we are in the mid of that cycle. Stocks like DLF, Godrej Property, if somebody is holding, definitely hold on. But even within that mid-cap range, you can probably start scouting for stocks which can also have some element of budget connotations to it. So obviously, I think the interim budget will have some focus in terms of affordable housing. And with affordable housing, again, taking precedence as far as budgetary allocations are concerned, a few of these stocks can very well in momentum. So something like a Brigade can definitely be kept on there.
Mayuresh, as we pretty much would start winding down the year, any pockets you think wherein the fundamentals, or rather wherein the valuations have run up ahead of the fundamentals and one now needs to ease out within those pockets?
So Ayesha, is it the power space that you're speaking, or?
Are there any such pockets? Power, of course, came from you.
Yeah. Sorry, I lost that. If you can repeat it. I'm extremely sorry.
No, I'm just wondering if there are any pockets of exuberance, froth in the market that you foresee, wherein the valuations may have run up ahead of the times and the growth projections, and you would say, take it easy, sound the alarm bells or warning signs here and recommend profit taking.
I think most parts of the markets have run up quite a bit. So to that extent, to a large extent, if you probably look at the entire FMCG story as an example, right? The take here is that the growth will keep on continuing. However, I think rural markets, as we see it, still seem to be under stress. I think the kind of gradual recovery can only start coming through from Q4 and the expectations of a good Kharif season coming through. Obviously, some MSP prices will get announced as we head into general elections. But generally, the volume growth seems to be very, very tepid. And that will probably reflect on Q3, Q4 numbers. The consumption index, specifically the FMCG basket, has also run up with the market. But I think the street might be disappointed if the volumes are not in tandem with the price moves that we've probably seen, and valuations are in no way, have never been cheap and is no longer cheap as we speak. So remain a little bit cautious within the consumption basket on the FMCG space. It all depends on how numbers will play out for these moves.
But let me ask you about the NBFC space, Mayuresh. With this entire rate cut cycle happening, do you think there could be an added trigger for these names, or do you think that in terms of the growth rates, they've already peaked, they're getting in the fresh money as well, so maybe the best is behind?
No, so I think they are penciling in to a large extent, Anisha, large part of the moves that are now getting reflected in price. But with the rate cuts, obviously NBFC players also benefit to a larger extent because the kind of leverage that they can then start giving out with lower rates can be substantially higher than what we speak. Obviously, the NIMs and spreads, which have seen some element of compression, revert back to means, and that creates a positive multiplier effect as far as return ratios are concerned. Having said that, I think the quality names within the broader NBFC theme, names like a Chola, is something that we continue holding on to our global focus lists. Shriram Finance is something that we continue holding on as a clear disclaimer as well. The recent RBI circular also is going to play its part in the next few quarters. till the rate cut cycle probably assumes. Shriram Finance, just as an example in a case of point, has only 4% in terms of an exposure to unsecured and personal loans, which are also very adequately covered as far as provisioning is concerned. So in lieu of all these factors, assuming growth to take precedence again in the next few quarters, NBFCs will be in the limelight. But specific qualitative names, leaders within this pack, is something we continue liking. Names like Chola Investment, Finance as a risk.